Hi there and welcome back to this week's trade recap. Once again, I'm here to show you the trades that I took this week. This is the last one of the month of January, as today is the 30th. This week I took 4 trades, 1 break even, 1 win, and 2 losses, but I still ended up green on the week. And without further ado, I'll show you the trades that I took. This is a really easy one. Let's start with the Tuesday trade, which was my first trade. The bias was really clear. We were kind of high on the range of this day, but this trade was really decent because we rebalanced both these fair value gaps on the hourly, which makes this an intermediate term low just out of these fair value gaps, also makes this an intermediate term low because we swept this short term low. And zooming in on the 1 minute, we see that we are generating trendline liquidity above, which is really clear. We have already swept all these lows, these relatively equal lows have already been taken out of the market. We have a manipulation leg and we started inversing, and this already started looking like a V shape. So going back to the 5 minute, this, which was the last important fair value gap on the way up, this was almost inversed, but as you can see, it didn't by a single tick. Usually I don't enter this type of trades, but if we zoom on the 2 minute, here we see that we have already inversed the 2 minute to the upside with an order block, and this order block with inverse with this momentum just by itself is an entry trigger. But because I wanted to play safe, I was waiting for every time frame to inverse, and I waited for the 5 minute, which wasn't that far away from this entry trigger. The 5 minute, as I said, ended up not inversing by 1 tick, but because we were already holding us strong on this zone, I entered it either way, and I took everything just when we swept the relatively equal highs created before the New York Open. Going on to Wednesday, we were already really up on the market, and that means that we need to have something really textbook for us to take a trade. And we had FOMC, so the trade that I took was after Jerome Powell started speaking. And if we zoom in on the 2 minute, this is a relatively equal high. Above, we have a fair value gap that also presents itself on the 15 minute and hasn't been tapped, as you can see by these wicks. And we left at a high. This is really decent. We have really good liquidity above. But we just started chopping. We left this 2 minutes, and I told myself, if this gets inversed, I am taking this inverse to the upside. But it didn't. It took a lot of time for it to get inversed, and when it did, I didn't enter because all this choppiness and this range wasn't looking really good. And it ended up working just to the 1 hour and going right back to the inside of this range. But as I said, I didn't take this trade. The trade that I took was on the 30-second. Here, I knew we were already chopping, so this is some sort of accumulation. And suddenly, when Jerome Powell started speaking, and Powell was just reading the statement, which was already disclosed half an hour before. So it doesn't make any sense for the market to start at so much momentum. And when we took this internal range liquidity and we inversed this 30-second with a lot of momentum, I entered it just out of the momentum because I called it an inverse, but as you can see, once again, it didn't inverse by 1 tick. But because we went down 50 points and went right back up with a V shape and a lot of momentum, another 50 points, and we have this good liquidity above, I entered this trade knowing that it would be at least an easy break even. And that's exactly what it was. It was just a break even because right after it took the break even point, we went just back below and the break even saved us. On Thursday, I didn't take a single trade because we just expanded below and we formed a 3 minutes at the end of the day, but I didn't take that one. And now on today, we were ranging between these two hourly fair value gaps. So usually the condition here is I wait for one of these to be respected, the other one to be inversed, and then I take some sort of trade till the end of that range. Or I wait for one of the highs or lows inside the fair value gaps to get taken, and then I take an inversion to the other side. And if we zoom in on the 1 minute, we have this clear that a low. It isn't the best because it is inside a 50-minute gap, and it has already taken this low inside a fair value gap, which makes it a protected low. But it stops being a protected low when we take buy-side liquidity. And I told myself, okay, we either take this low and I take an inversion to the upside if it presents itself, or we take this high of the range and I take an inversion to the downside. Okay, zooming in on the 30-second, that's exactly what happened. We took my preference, which was to take the high and then have an inversion in the direction of the data low, and that's exactly what happened. We have this 30-second, and I looked at this and I said, okay, this is a really high momentum trade, and this is a giant gap, and because we have a lot of momentum, I sized down. Usually on this trade, I could have taken around 2 contracts, but because this was a high momentum at the open, I understood that, okay, if this doesn't work, this can go with a lot of momentum to the upside because we are still inside the first 5 minutes of open, which usually means a lot of volatility. So I entered with half my size, which just means that, as you can see, I lost this trade and I just lost 0.5 R on the day on this trade. Now, this trade, someone can say that it was a break-even trade because we mechanically did take the break-even, which is the first swing point after the inversion. And someone can say that this is where we should go break-even because right at open, this shouldn't stop, yada yada yada. But this is a really clear break-even point. This is a really clear wick. I was waiting for us to take this wick, go break-even, and then see what happened. But it didn't. It just swept this break-even. If we go on ES, it didn't even sweep the low as well. It created triple equal lows that if I even saw the triple equal lows on ES, I wouldn't go break-even because I would have been waiting for us to take the triple equal lows for me to then go break-even. But I wasn't even looking at ES because this was a lot of momentum. I should, but it doesn't matter in this one because this is where I wanted to go break even. There's a lot of momentum, and I thought that this momentum would take us at least here, and if we swept this low and went right back to break even, it probably would save us because I was expecting a lot of efficiency to the downside, to the data low, but it didn't happen. It's okay, it's an inevitable loss. Some of the trades have a loss and they can't really be explained. Now, right after this loss, we had this 30-second, and usually some data lows can take some more time to have a setup that works towards it. So because I remembered myself of that, I saw this 30-second with an SMT above, and when we had this momentum, once again I just entered with half sized because I was entering really below. Apart from what I said on the last trade, this one was habitable. I could have not taken this one because we are taking a trade right after this one failed, so we are still inside this range that isn't being efficient. And if this trade didn't work, as it didn't, what we usually expect if we are still looking for shorts, we usually expect us to get some sort of manipulation leg and another obvious setup to the downside, and then we will take this trade. But because I was so focused on this data low and all this low resistance liquidity, that it looked like low resistance liquidity, but as you can see, it is high resistance because we are not taking it. This ended up failing, which it's okay because I was having a really decent risk management and I only lost 1 hour of the day. I lost 2 trades, but I only lost 1 hour of the day. But this trade was evitable and I could have just ended up with 0.5 hour loss on the day. This trade, I shouldn't have taken it, but that's something to remember for the next time. As you can see, Friday, I usually blame myself, but I think here I can really just blame the price action because this is, I can't even explain this. It's not clear. It isn't making anything. And I will try to have that in mind for the next one. I ended up the week green, as I said in the beginning. It kind of means that I am some sort of break even on a week. I still ended up the January green, not a lot. I ended up January 1.5 R up, which it's a lot of time, a whole month to be 1 R up, but that's better than nothing, and I will be here trading on the next week. Thank you for watching. I'll see you in the next one.